Welcome to today's session and thanks for joining. In these videos, I show how you can swing trade profitably in any market condition, up, down, or sideways, by taking only trades where forces from all the levels market, sector, industry, stock, fundamental and technical, and even seasonality in your favor. I will review some of the trade ideas or market analysis I shared earlier and show how they played out. If you stay with me, I will also try to find some stocks that you may trade on Monday. You could also probably trade them on Friday if you could find them in real time using Q systems. You could. To scan or not to scan to find profitable swing trades. You need to identify a trade candidate before placing a swing trade. How do you identify the stock to trade? You could analyze the stocks one by one. That is feasible if the universe is small, 10 to 20 stocks or less. Most swing traders have a much larger trading universe, like all high growth stocks, liquid stocks, optionable stocks, etc. It is not practical to go through such large lists of stocks one by one. Scanning is a better way. Scanning for what? Some traders scan for indicator values crossing thresholds or indicators crossing each other or price crossing an indicator and try to decide if there is a trading opportunity. Q does it differently. It can scan thousands of stocks for actual trade setups. Each trade setup is for one unique market condition that identifies trade candidates fast. You could scan all setups or only the setups that you want to trade. For example, trend following setups only. I prefer to use Q scans. One reason is time efficiency, but there are few other reasons. One is that Q scans finder allow me to visualize the technical breadth, which helps me decide what kind of setups to focus on, trend following, reversal, or something else. Another reason is that Q scans are unambiguous. That is because the setups themselves are unambiguous in Q systems. The Q trade setups can be run in 100% real time on both Q Elite on TradeStation and Q Global on Metastock. Often, using Q scans, you may find a trade setup in a direction opposite to the current market. For example, finding a short setup in a bullish market. Combining the technical trade candidate with fundamentals and industry score gives a 360 degrees trade candidate. If you stay with me, we may explore that idea later today. Greetings, I am Sagar Nandi, retired IT professional swing trading stocks in the USA as well as India markets using only one trading system Q that I developed myself. You may contact me using my email ID info@superiorprofit.co or tradingprofitably@gmail.com. I regularly share live market and stock analysis on my website superiorprofit.co, X handle superiorprofit, and YouTube channel Trading Profitably. All these are open to the public and you are most welcome to make use of them. Disclaimer: this demonstration is for educational purposes only. I am not an investment advisor. It is not a trade recommendation. Trading involves risk. You and only you are solely responsible for the outcome of your trades. Options trading can be risky. You may refer to the characteristics and risks of standardized options document from OCC to decide if options trading is suitable for you. Q runs on Metastock and TradeStation platforms. It has multiple components. I'll use several of them in today's session as well. Let's start with dollar index. First, let me review dollar index as I shared 1 week earlier. At that time, in the last market recap, I showed that dollar index in weekly was bullish, daily was also bullish. However, noted that it was at jump thrust high and price extreme high and said that this up move may not be sustainable. What happened to dollar index? This is dollar index today. Right after I made that comment in the previous market recap, when it was at jump thrust high, price extreme high, right after that on Monday, it displayed the unique reversal signal bearish headwind, and after that dollar index continuously fell down. Note that though last week was a holiday shortened week, dollar index was active all the 5 trading days. So for all the 5 trading days of the week, it continued to come down right after I made that comment last week. Now, in the weekly, it has a false upside breakout. It has a bear release signal. And in daily, it fell after the bearish headwind, which was also accompanied by big move down 3. So this pattern that has worked for me over and over again at price extreme low, the opposite of that pattern worked in dollar index at price extreme high. At jump thrust high, price extreme high came big move down 3 and since then price came down. Where did it stop? It stopped right at the trend line support in daily. That is why I am not able to be bearish on dollar index here. Instead, if it can hold the support and go up, that may put bearish pressure on the market. I look at dollar index regularly, and another instrument that I look at regularly to see how market may be influenced is the mega cap custom index. If you look at the weekly backdrop chart, the mega cap custom index closed higher. However, it closed with a bearish indecision at the top. In daily, that bearish indecision came as a cluster earlier, then it displayed a bearish headwind, possible reversal signal, and it is moving sideways for more than a week. It is at a very high price level and displaying indecision and possible reversal signals at the top. That is not a point where I would like to buy. At the same time, there is no short signal, so I am not able to short as well. Q market breadth invaluable in assessing the internal health of the market and anticipating a change in market direction. total view, the broadest view of the market, internal health check. Cautionary signal comes from a large cluster of confirmed Hindenburg signals. A very large cluster that has not come for a long time. This signal is worth noting, but it is not immediately actionable. So I don't go rush to short. Looking at the Hindenburg cluster, I do become cautious about buying. On the other hand, the 3-month new high-low oscillator is immediately actionable. That hit extreme overbought condition and price is staying there, so that is preventing me to buy many stocks. Instead, I may look to short some of the stocks at a high price level. Drilling down from total view to the composites, both Nasdaq and NYSE has confirmed Hindenburg's, and 3-month new high low is extreme high enough that I am not willing to buy many stocks. And now I am going to look at the major indexes one by one. Dow Jones Industrial, 3-month new high low extremely overbought. Nasdaq 100, 3-month new high low extremely overbought. Russell 2000, 3-month new high low was extremely overbought and then came down a little bit. Still at an area where I am not willing to buy many stocks. S&P 1500, 3-month new high low extremely overbought. S&P 500, 3-month new high low extremely overbought. The major indexes and the Hindenburgs are clearly telling me to stop buying at least the stocks that were going up with the market. What is the market external view? This is a snapshot using Q Performance Finder for the market ETFs using weekly interval. All the market ETFs went up this week. The worst performer is QQQ, went up but worst performer, and IWM is second best performer after DIA. DIA is the best performer. This is in sync with what I explained in the last market recap. I suggested buying small cap stocks because that was not so overbought yet, and Russell 2000 was the only major index that did not have a bearish divergence in percentage of stocks above 50-day moving average. You may review last week's market recap, how I came to that conclusion that I might want to buy small caps and I might want to avoid large cap tech. Large cap tech, that is QQQ, did go up but is the worst performer. Let's look at the market ETFs. The best performer is DIA. Weekly is very bullish in color and shape, has trend line support. Daily has trend line support very close to Friday's close. Because of the proximity of the trend line support, there is no question of shorting, and even if the trend line support that is immediately below price is broken, there are other supports nearby. So I'm not looking to short DIA or industrials, but it is overbought. I am reluctant to buy. S&P 500 has trend line support in weekly, trend line supports in daily, not able to short. reluctant to buy because it is at upper boundary. QQQ underperformed the market. In the weekly, it has displayed bearish indecision at the top. Not a time I'd like to buy. Notice how the weekly daily are different from DIA and SPY. DIA actually made a new all-time high, and if I go back, SPY also made a new all-time high this week. So this is SPY. Go back one more slide. DIA. Both DIA and SPY made a new all-time high. But back to QQQ. QQQ did not make a new all-time high. Instead, it is right at the tip of a triangle pattern. If it breaks below the trendline support, creating the triangle pattern, though there are other supports, knowing that it is the weakest pocket of the market ETFs, I may look to short some of the QQQ constituents. But is there a better choice? Let's look at IWM. IWM also displayed the bearish indecision at the top in weekly, and it displayed bearish indecision cluster in daily. I tweeted about IWM creating the false upside breakout several times last week. Did that once more on Friday. So it has created false upside breakouts for 3 days in last 4 trading days. That is not an instrument I am willing to buy. See how my analysis is telling me what to do and how that is changing from one week to the next. Last week, my assessment was that IWM was bullish but not having any bearish in divergence. It was not extremely overbought yet, so I was willing to buy. And it did better than QQQ, did better than SPY. But now I have switched my view. It is not bearish in any way. Clearly it is in an uptrend, but looking at the bearish signals at the top and the false upside breakout, I am willing to short. I am also willing to short because the trendline support is far away from Friday's close, which was not the case for any of the other market ETFs. So I may look to short small caps, but those are reversal trades. Obviously, it is in an uptrend. Those will not be trend following short trades. Let's continue with our market analysis. Let's look at seasonality. Nice to have. It's not a reason for me to trade in itself. The market had a strong bullish seasonality in November. How did that play out? And what is the market's seasonality in December? Starting with IWM, November had bullish seasonality. It went up by 11.1%. In fact, this is the best performer for the month also. December has neutral seasonality. So relative to November, that is weaker. Of course, it is not bearish, it is just neutral, but relative to November, it is weaker. So November had a very bullish run in IWM. That does not mean the bullish run is going to continue in December. That's what seasonality is telling us. Not that it is going to drop, seasonality is neutral. DIA, November also had bullish seasonality, but notice it had less bullish seasonality than IWM. IWM had 80% bullish seasonality in November and DIA had 75%. DIA also went up by a massive percentage, but still far below IWM's gain in November. And again, December has neutral, that is lower than November's seasonality. SPY also strong bullish seasonality in November, went up by 6% in November, and December is continuing to be somewhat bullish. Not bullish enough to use seasonality as a reason for trading long trades that requires at least 80% bullish seasonality. December is 70%, still bullish but not too bullish. In any case, SPY is stronger in December relative to DIA and IWM. And QQQ had a reasonable bullish seasonality in November. Of course, it went up, and December in fact has neutral seasonality. But if you remember all the seasonality percentages for the 4 market days, you would notice QQQ had the weakest one, but all of them are neutral in any case. The seasonality is not a reason to short any of the market ETFs in December, but it is telling us that the bullishness of November is not continuing in December. If at all, these seasonality charts are telling us to avoid large cap techs in December, but not large cap stocks. So SPY has still bullish seasonal 75% in December, so it's telling us to avoid large cap techs but not large caps otherwise. Bucket analysis and sector industry stock breadth using Q edge helps to decide preferred trading direction that may be different from the current market trend. Friday's sector industry stock breadth is bullish. 83% of stocks are above mid Bollinger Band, that is bullish, and bucket analysis is showing it is neither overbought nor oversold. Allows buying, doesn't allow shorting. If we look at the sector industry stock breadth transition from 1 month to 1 day, long term period 1 month was bullish, 10-day period also was bullish, and in fact bullishness increased. That continued into 5 days, last 5 trading days, which is also bullish. This week was shortened trading days, but this is using 5-day period. 5-day was bullish. Last 2-day and 1-day period are not bullish as much. Still remaining bullish, but bullishness is reducing gradually from long term to medium term to short term. That is a reason to stop buying or buy less, and that is also a reason to look to short stocks at a high price level. Technical breadth, invaluable in deciding preferred trading direction from breadth charts, and then find unambiguous technical setups for individual stocks. In the last market recap, I showed that the weekly technical breadth was flip-flopping, and I commented that if that flip-flop continued, this week would be bearish. It didn't turn bearish overall, but it weakened considerably. Overall, it is still bullish though, whether you look at all setups, strength setups or continuation setups, but reversals are more bearish. Reversals are non-negligible in number. That is a reason to be cautious about buying stocks. This is weekly technical breadth. If we look at the last trading day's technical breadth, Friday, which was also a shorter trading hours day, the all setups are neutral, strength setups are bearish, strength setups meaning breakout or gap, and I can see a lot of breakouts are bearish in percentage. So if I am looking to short stocks, I may look for breakdown short setups. Trend continuations are still bullish, reversals are bearish. So if I look at it and combine all the insights, if I am willing to short like small cap stocks for reasons I mentioned earlier while analyzing IWM, if I am looking to short some small cap stocks, I may look to find breakdown setups at very high price level. That is kind of reversal. Breakdowns can actually be reversal setups as well. They don't have to be always trend following. They can come in trending market, sideways market, as well as reversing market. So in this case, see how I'm using technical breadth weekly, daily to not only see how the breadth is, but look for a specific trade type. And if I'm looking for specific trade type like breakout, I may use scans for that. Instead of looking to find all other trade setups, I may only focus on breakdowns. That is one way I use Q scans. Market level summary then, combining all the insights we looked at, the market remained bullish, no doubt about that, and it remained overbought. I would not like to buy stocks now, not many at least. I may not be willing to buy much even if the market goes up next week. If I buy at all, I may look for undervalued stocks in defensive sectors. Maybe some of them were underperforming, and if I am not so bullish on the market looking at it from different angles, I may look to buy value stocks if at all. I'll be willing to short if the market comes down next week. I may prefer to short either small cap stocks, the support was far away for IWM, or large cap tech stocks provided QQQ breaks below the triangle pattern. Review of last week's trade ideas. Last week the market went up and I shared only one buying idea, GIS, in the last market recap that outperformed all the market ETFs. In fact, I shared in the last market recap, I bought it before Friday, so my profit was higher than 1.9%. And also in the last market recap, if you go back and rewatch, I shared Nvidia's chart. And even before that, I had tweeted about Nvidia breaking support in fine-tuned precision entry 5-minute chart. I mentioned in the last market recap that at that time I shorted Nvidia and I was holding a bearish position in Nvidia using options verticals. And this is a snapshot of Nvidia I shared in the last market recap. Last market recap, right? I showed, and you can see this from this last week's snapshot. Weekly had bear release and bearish indecision and bearish backdrop color, and I also showed bearish volume was increasing. In daily, at that time itself, it created a false upside breakout, and flow color, momentum color in daily also turned bearish. There was no swing short setup because trend line support was nearby, but using intraday precision entry chart, I shorted it in this area. So by Friday's close, I was already in the trade. That's what I mentioned. And how did Nvidia move today? Note that QQQ, SPY, DIA all went up, IWM went up, SPY, DIA made new all-time high. But what happened to Nvidia? Nvidia in fact came down. The backdrop color is remaining bearish. This was last Friday. After that, prices come down. I was already in the trade using long put verticals, and I was watchful of the trend line support in weekly. They hold very well. On 27th November, it stopped right at the weekly trend line support, and on 27th November, that is Wednesday, in daily it displayed a bullish indecision signal and price recovered to the yellow direction line. At the low of the day, that is Wednesday, I had well above 100% profit in the long put vertical, and right at the close I had about 100%, slightly above 100% profit. So my profit reduced, but still I had more than 100% profit in the trade, and I closed it fully looking at the trend line support holding. After that, price has gone up on Friday, but not a lot. The candle shape is somewhat indecisive with lower and upper tails. It has no bearish setup, but this is one of the mega caps that is having bearish backdrop color. Not many of the mega caps are having bearish backdrop color. So this is continuing to be one of the mega caps that I am having bearish view on. I am reluctant to buy Nvidia now. Having an opportunity, I would like to short it. And if it falls, then this is what I mentioned in the last market recap also, that may affect QQQ more than other market ETFs, and if Nvidia falls, QQQ may also have a triangle breakdown. The other stock was GIS, right? Let's look at GIS. That was a buying idea. I bought GIS, and this is what I mentioned in the last market recap. See, the trend line support I used in Nvidia to close the trade, short trade, and here for GIS, I explained in the last market recap, I used the trend line support to enter the trade. I was already in the trade in the last market recap. I mentioned that, and this week it went up. It has already covered well much more than the risk distance. Stop would be just below the trend line support, entry would be somewhere here. So it has covered much more than the risk distance. Using Q guidelines, one would book at least partial profit. I did the same. So both the trade ideas, interestingly, one long, one short, that I publicly shared, I told I was holding both, I could have a profit in both of them. And the secret of these consistently profitable trade ideas that I share publicly, open secret, is that I find unambiguous trade setups using Q scans, and I align sector, industry, market level force, fundamental force to make them 360 degrees trades. Then this week's theme, scanning to find trade setups. Let's do this. Let's try to find the Russell 2000 constituents using Q index. That will be a nice way to demonstrate that how I actually go about finding trades based on my market level analysis. So it's connecting with Refinitiv, retrieved 1962 constituent stocks, everything done in real time. No data is stored on my computer. During the live recaps, my system is slower than when I trade because I have many streaming softwares running, and my internet is not super fast. I live in a village, remote area in Thailand, about 800 kilometers from Bangkok. So look at the advanced decline. breadth from 1 month to 1 day. This pattern is similar to what we saw in Q edge. It is still remaining bullish, but the bullishness is reducing. So it is telling me I am okay to look for shorts in stocks that are at a high price level. So let's create a scorecard of all the Russell 2000 constituents, again connecting with Refinitiv. Give it a few seconds, please. Well, it's taking a few more seconds than I am happy with. So what I was trying to do is look for small cap stocks that are already starting to come down, break down short setup, and I wanted to use Q scans to find such a candidate. While it is retrieving data, let me see. Okay, I actually thought the system might be slow, so I created a scorecard of the small cap stocks. It is already there. So let me stop the live retrieval from Refinitiv. I have the small cap 1962 stock scorecard already saved here. So what I am going to do, let me do a top-down analysis also. I'm going to look at all the industries from Q Edge industry scorecard, and using a single click I'm going to focus on industries that are either weak or decelerating, and then drill down into stocks of only those weak industries in Q Vital, that is the Russell 2000 stocks. Look for stocks that are down by at least 1%. I have so many stocks now. See, from about 2000 Russell 2000 stocks, I am now left with only 195. What are these stocks? They are either in weak industries or decelerating industries. They are down by at least 1%, but I also want to align fundamental weakness. So let me click red one star. That will give me stocks that are either overvalued or having negative earnings growth. So I'm now left with only 95 stocks. And see, from technical breadth daily, I decided to look for only breakdown setups. I could use Q Finder, but let me also show, if you are doing it in real time, another way other than running Finder is to run the short breakdown setup, short breakout, and I am going to run it on only those stocks that I found, 95 stocks. So let me run the scan running in real time on 95 stocks. What are those 95 stocks? These are firstly small cap stocks. They are either overvalued or having negative earnings growth. They are in either weak or decelerating industries. Then I could look at the outcome one by one, and let me go through these stocks. APLT, it fell too much, of course very weak, but I don't want to chase a stock like that for shorting. Next one could be a short candidate, but let me go through them quickly, and I will stop at something that I am willing to consider for short. CFFN. Let me note it down. CFFN. Okay. I could use Q elite on trade station also, but let me continue with Q global on meta stock. CFFN, it's a stock at price extreme high, created a reversal candle at price extreme high just one day earlier, and now it broke down. So that is what I'm looking for, small caps breaking down from a high price level. And it is breaking down before IWM is breaking down. So CFFN, I don't mind shorting, but I will again look at its fundamentals, one page score. CORT has the lucrative pattern, jump thrust high, price extreme high, then came big move down 3. We saw this pattern worked in dollar index too. No reason not to consider shorting CORT. Stop is very narrow. I would prefer to short using short call verticals if options are liquid. Let me note it down on my sticky note and continue. This one I am not finding interesting. Let me stop at stocks only at high price level and breaking down and no nearby support. See how fast I am able to switch between stocks. If I don't like it, I am stopping it. Whenever I have no reason not to like it, I am explaining that to you. MCB, I like this stock at a very high price level, breaking down small cap weak fundamentals, and it has a cluster of bearish indication plus cluster of bearish headwind. Flow color turned bearish, very sharp and clear breakdown. So MCB also is interesting. NIC also has a bearish headwind, clear breakdown, closed right at the close of Friday, price extreme high, created a reversal candle like that. Also NIC. Okay, let me stop here. So we found several shorting candidates. Interesting, isn't it? IWM is still strong, but my analysis is telling I am able to look for shorting candidates at the top. So if I enter the other stocks here, CFFN, CORT, NIC, MCB. You could consider shorting any of them. I can see MCB is the worst performer. So let's look at that. Now using Q Elite. Weekly neutral. Already saw the indecisive signals, bearish signals at the top, bearish headwind, bear release, bearish traffic light breakdown, price extreme high. So this is looking good for me to short. Now is the time to look at its one page stock scorecard. Back to Vital. Regional banks. Interesting. Let's retrieve regional banks industry scorecard from QH. That industry I'm willing to short. One of the weakest, and it is also showing high deceleration over 2 days, was one of the strongest industries earlier. Now it is one of the weakest, decelerating industry and weak industry at the same time. I am happy to short a stock in that, and this stock is at a very high price level. Okay, Refinitiv is giving server error, but no problem. Much of the data is already retrieved. It has negative earnings growth, reversing earnings growth from positive to negative. Graph is also not looking attractive, medium valuation. no dividend yield, I am happy to consider shorting a stock like that. So MCB is a shorting candidate for me in a very bullish market. Now I mentioned if I wanted to buy at all, I might buy undervalued stocks in defensive sectors. And I found one that has a pattern that I like, a pattern that I mentioned today also, and a pattern that came in a stock I shared right on this day before knowing the results. That pattern came in CLVT. That pattern was jump thrust low, price extreme low, came big move up 3. Bought it right on that day. Reversal signal. There was not even a proper trade setup using Q. That's why I didn't share it on Twitter but shared it on the Traders Club on my website. It's open to all Q traders. The stock has gone up by more than 20%. Massive run. Interestingly, I could catch the first buyable day by any means in any trading system. Perfect timing. This pattern works for me over and over again. So long as the stock is fundamentally strong, I can see that from Q Vital. And let me share one stock that may be considered next week for buying. I would not buy it on Friday, did not buy it on Friday. That is BG. Notice it had weekly watermark support, created a nice false upside breakout. Sorry, false downside breakout. False downside breakout is bullish. Now it is moving in a narrow range, in fact moving inside a triangle pattern. Prior to that, what happened? It was at jump thrust low, price extreme low, came big move up 3 after that on this day. Also it had a bullish headwind. Almost miraculously it caught almost the very bottom. But let's come back to today. After the big move up 3 that followed jump thrust low, price extreme low, price is moving inside a range, and if it can break out of the trend line resistance, that will give me a low risk buy setup in BG. Is it a defensive stock? Let's find out. By the way, MCB majority of peer stocks were also down, so in itself the industry was down. We could see that from the pie chart before I erase that. BG's agricultural products and services consumer staples sector, that is defensive sector. It is undervalued stock. See how I am focusing on what kind of stock to buy, what kind of stock to short. Pays 3% dividend yield. It's a profitable company. Earnings per share is positive. And see my shorting candidate regional bank stock had majority of stocks down on Friday in a decelerating weak industry, and my possible buying candidate, if it breaks to the upside next week, BG, majority of stocks were up on Friday. In itself the industry is strong, opposite to my shorting candidate. And if I look at the industry score, it is not one of the strongest, but it is improving. It has some reasons to buy, not enough reasons to buy in terms of industry as of Friday, and also the breakout did not happen on Friday. If it can go up on Friday, maybe the industry will also be strong. So that could be a buying candidate for this week. I did not buy it. I will keep an eye on it next week. MCB is the short candidate. I did not short it. I'll keep an eye on it. That is how you can use Q scans to find trades that are either aligned with your trade, BG, or opposite to the current market trend. If you carried out the Q360 degrees analysis like that, you could probably find more trading candidates today just as you would find any other day. Let's end today's session here. Thanks a lot for joining. I look forward to seeing you in my next session. Have a great weekend. And as I always say, as these live examples week after week show, there is no reason not to do that. I'm quite confident about that. Trade profitably. Thank you.